Hey guys, this is Vishal from Uncharted FX, and I wanted to talk today specifically about the Canadian mining industry. Technically, the mining industry. We could talk about Australian stocks as well. But I've been asked to talk about this topic. I do live in Vancouver, which is the center for mining, pretty much, and mining finance. I said it in my previous video, but mining to Vancouver is what technology is to San Francisco. With my previous employer as well, I was privileged to be able to speak with a lot of these mining executives, visiting them at their offices here in downtown Vancouver. And also, I went to PDAC, which is the largest mining conference in Toronto, that's held in Toronto. So I was there and got to speak with companies there. And I regularly visit and attend conferences here in Vancouver, which are pretty much all mining focused. So every January in Vancouver, we have the Vancouver Resource Investment Conference. And every couple of months, we also have the Metals Investor Forum. In summertime, generally around July, Sprott, they hold their natural resource symposium. So I went to that one. I attended that one once, and the information was just excellent. You do get what you pay for that conference. So I've been following the mining industry for a long time. I have a interest in precious metals and commodities in general. I generally believe, and this is just me, I think that there is a big opportunity in mining that's coming up. Just because I think a lot of these assets are cheap, and a lot of mining stocks are cheap. So a lot of these fund managers, they're not allowed to just hold cash. So if there ever is a big market correction or something, and that money has to be deployed, yes, it will go into bonds or the dollar. But I think a lot of undervalued sectors and assets, such as mining stocks, could see a nice pop. So that's the game plan. Of course, now for junior mining, a lot of these junior companies, first of all, you know what, let's say I'm not going to call them investments. I would call them speculations, because a lot of these junior mining companies aren't actually making any money. So, of course, when I talk about juniors, I mean companies that aren't actually producing gold or any metals, silver, copper, whatever. What they're doing is they're drilling and holding on to a land package or an asset in hopes of finding a good resource, and in hopes of getting bought out by one of these bigger companies like a Goldcore or a Barrick and or Newmont, etc. So the play for this is a lot of these big gold companies haven't really been adding to their resources. So there is going to be a time, if gold prices do go higher or silver goes higher, a lot of these mining companies will have to find additional resources someday. And since they haven't really been spending money for discovery purposes, what they'll do is just buy out these smaller companies that have already done a lot of the de-risking. So what I mean about de-risking is they've done they have the environmental permits, all that kind of stuff. So they're basically shovel ready, ready to go. And of course they have a resource, so they've done their drilling, and that's what we're focusing on. So it is a puzzle. There's a lot of geology involved, obviously, because if you can read the veins and all that kind of stuff, you can sort of know if this resource is good, if it's actually economically viable. That goes into such things as the PEA, which is the preliminary assessment. We won't get into a lot of those details, but I'll talk about some resources where you can learn about a lot of this stuff. I'm mostly focusing here on how I analyze stocks, and of course, you know, the big thing about the mining stocks is in Canada, or the TSX. Mining is huge, right? I mean, a lot of people have heard about the Bre-X scandal, where the stock was trading at a couple of cents and then went to $280. But there's tons of stories in commodities. A lot of people don't realize the money that can be made and lost. But the thing about commodities, which I like, is if you think in the future, you're going to be turning on the lights, starting your car, turning on your stove, whatever, consuming things. there is going to be some sort of commodity or precious metal involved. A lot of the people who are into electric vehicles and stuff, some of them emit, but they won't admit, but copper is going to be a big part of that, zinc as well. So mining is here to stay, in my opinion. It is not a sexy industry. It is a crap industry. I think, Doug Casey has said that, right? Where the profit margins are very, recently have been quite bad, but generally when there is a big bull market in commodities, the returns can be great. And again, I use my theory, not my theory, but my strategy in stocks, but you can sort of see how, you can get moves from 10 cents up to like 39 cents. That's Japan Gold. Ascot Resources, we can talk about this. So not the best, 96 to $1.45, but still, you get these kind of pops in stocks. So there's tons of examples we can go through, but of course, what I want to talk about is when you're looking at stocks, you're going to be looking obviously at the prices of gold, silver, because a lot of these miners, where the prices are right now, I think a lot of miners for gold have like a break even around 1,200 or 1,100. And I think silver, actually, we are pretty much at break even for silver miners. So when you know this kind of information, you can sort of see, okay, you know what, a lot of these companies aren't going to be doing well because they're not going to be making too much money. They're going to have to take out more debt, etc. And what adds more pain recently is the fact that oil has been going up. So the fuel costs have been going up while the price of metals have been going low. So it adds a bit more pressure to these companies. So I'm gonna get one thing out right now. I heard this from an interview on Wall Street for Main Street, which is a great YouTube channel with Jason Burak. I recommend you follow him. Great content. He had an interview with Sandstorm Gold, I believe, CEO, and he spoke about how right now, look at cash balances, especially because there isn't much financing going on for a lot of these junior companies, which means a lot of these junior companies aren't raising money. And of course, as we go along, you'll see why that's important. But a lot of these junior companies aren't raising money, which means they won't really be able to drill, and there won't be a catalyst for stock prices to move up. So be very selective, and I'm going to share with you some things that I look for when I look for companies. And obviously this financing part, cash, is very important, but we'll get to that. But I just want you to remember that right now, a lot of maybe billionaires or sovereign wealth funds, individuals, high net worth, they will be providing capital to certain companies, but it's really hard right now. From that interview, the information that I got, that it's actually really hard to finance projects. So we'll get back to this, but I just wanted to throw that out. So the first thing for mining, a lot of people look at the ETF, the VanEck ETF, which is the GDX, and also the GDXJ. So this is an ETF of miners. So my first thing looking at this is, if we're looking at market structure, we had our uptrend. We had a bit of a range with a double top, which is a topping pattern, at a nice flip zone, resistance and support. And honestly, this doesn't look too good. There might be one more wave lower. And of course, if you look at the charts of gold, which we did, we talked about this in my blogs and my market analysis, my video about analysis for this week, at a very important juncture. So GDXJ is the gold miners ETF. If you want to see what companies are composed of that, they're all here. You can just do a Google search, see what companies are there, but it tells you how many shares, the market value. So you can see Newmont is the biggest part of that VanEck ETF. So most of these, the GDX, they're all obviously companies that are producers. They're either large producers or they're mid cap producers. So that's what the GDX is showing you, right? It's showing you the prices of all these large cap producers and mid cap producers. So this is generally what a lot of people follow. While a lot of the speculative guys, we look at sometimes the GDXJ, which is the juniors. So you see this one also has some small cap producers like Kinross, but a lot of them, and B2 Gold, mid cap producers, sorry. But some of them are, you know, companies that aren't actually producing anything, right? They're just sitting on resources, right? So I believe First Finance was on this. First Mining now, sorry. So there are some companies that, you know, aren't actually producing anything. This is something, you know, just to take a look at. Well, to be honest, most of these guys are producers, mid-cap producers. So this is just, you know, another way to get to know some of these companies, because there's a ton of mining companies. So in terms of doing your research on mining companies to follow, on my video on stock resources, we did look at Webull.com, and that's a good app or a stock screener. Some other things I'll recommend is the Northern Miner. So they have their own newspaper, I believe. But yeah, subscription. So they have their own newspaper, print edition, digital. Get it, you know, if you want. What I recommend though is their book here. I like this book here, Mining Explained. So if you're new to this, if you don't know anything really about mining, I think this little book is a good tool that you can use to sort of learn more about the industry. So that's Northern Miner. There's also Resource World, which is a magazine, and I'm subscribed to them. So if we go to their subscribe, you can get either a print copy mailed to your home, or digital, decent prices. So, you know, $13 for 1 year, $25 for print and digital. I'm a bit more old school, so I go for the print and digital. I like to smell the paper, touch the paper, that kind of stuff. So that's what I do. But it's a good resource. It talks about a lot of the news going around in the markets, in the mining industry. So this was the last edition. You know, look at some of the stuff they talk about, but they give you a lot of tickers that you can search up, and then you can do your own research. So good stuff, a good resource, I think. And then, of course, we have sedi.ca, which I spoke about in my previous video on resources, but this is probably, you know, the hottest, or well, not the hottest, but the best site to use for coming up with ideas. If you click on companies, you can see the top movers, the most followed, etc. If you click on companies, you know, you'll see there's even like chats where people talk about certain companies, post news, and all that kind of stuff. So, you know, of course, be careful when you look at some of these message boards, but it's more for, you know, seeing what's moving and whatnot. And of course, you know, it is a lot of mining focus, but now you're getting a lot of marijuana stocks, etc. Right? So it's a good Canadian site, I think, that you should follow, see what's trending, all that kind of stuff. So this is a very valuable resource. So baystreet.ca is also a good news site. I mean, it's more focused on Canadian stocks. So they have, you know, a lot of Canadian data. You know, generally the Canadian TSX is mostly composed of energy stocks and well, not real estate, it's actually banking, and a lot of like materials, right? So mining is huge. So this is just a site just to keep up with certain Canadian news and all that kind of stuff. I should have actually posted this site in my other video, but well, here it is. So this is what you can, you know, a good source, I think, for Canadian investors. So also, what I wanted to do is well, let's talk about the financing first. Let's talk about this site here, Canadian Financing. So this site here, it splits in mining, oil and gas, and technology. You can get an email delivered to you either every day or every week. You can subscribe, it's absolutely free, and it tracks all brokered and non-brokered Canadian private placements and public offerings. So what a private placement is essentially when these companies try to raise cash or equity, and they do it generally without selling shares because they don't want to dilute the shareholder. But essentially what they'll do is they'll raise some cash with some high net worth investor or firms or whatever, and you can see this is how much money they made. So Triumph Gold had proceed of this, so it's good to keep up with. And the reason why I keep up with this is because you got to remember the people who are giving money to this company, they have done their due diligence. So what they're expecting is they're expecting that this money will help initiate some sort of catalyst for the company. So maybe the company wants to do a specific drill hole, which they think is very special and can lead to a good find. So a lot of these investors have done their due diligence, and their hope is that if they give money to these companies will drill, find some sort of catalyst, and that catalyst will accelerate the stock price higher. So this is why I think it's important. And also the way they do it is also through something called private placements and warrants. I did a blog post on warrants, but essentially a lot of these big finances, they won't just hold stocks, but they'll do warrants, because what a warrant is essentially is a warrant it basically gives the person the right but not the obligation to buy shares of that company at a specific price. So essentially, let's just say Triumph Gold. I mean, I'm just going to throw out some numbers here, but say some guy gave some money to Triumph Gold for raising money. They'll probably ask for a warrant, which says that within, say, 2 years or 5 years, there's always like a time limit. It says that I'm allowed to buy shares of Triumph Gold at 10 cents per share. Again, I'm just throwing numbers out. 10 cents per share for the next 2 or 3 or whatever time frame they come up with. So essentially what that does is it allows the issuer to make more money because they've provided some equity to the company. And if the stock prices rise up, say Triumph Gold shoots up to like $2 per share, the issuer has a warrant which gives him the right to still purchase the shares of Triumph Gold at 10 cents and immediately flip it on the market for $2 per share. So this is why a lot of issuers, they want warrants, because it's they're taking a risk to give some funds to this company, and they want to be what do you call it? They want to have a warrant just in case. It's risk, right? So it's a good way to make more upside, right? A good way to get compensated for the risk. That's what I'm trying to say. So if they're gonna put their own money, they want a bit of compensation. So warrants are always good. And by the way, you can actually trade warrants also. So I don't know too much about the details on that, but generally a lot of these big funds, they're not buying stocks that are like under $5 or $10 okay, but under $5 or under $1, they're not really going to buy them. So what they'll do, and especially mining companies, right, because a lot of them aren't actually making money at all. So what they'll do is they'll buy the warrants. So there is actually a market for an aftermarket for warrants as well. So this site is good because when a company is financing and raising some equity, like Triumph Gold just raised $2.152 million bucks. They're probably going to use it for some sort of catalyst, for some drilling, and that can, if the drill results good, that can allow the stock price to go higher. So a very invaluable resource. I signed up, so I get emails every week or every day. It's up to you, right? And again, technology, mining, and energy. So it's a very good resource. So I wanted to talk about SEDAR and also SEDI. But the way to do this is essentially SEDAR is a site that has all the financial documents of companies. So I'm just choosing a random company. I just chose Ivanhoe Mines. Generally, if you go to their website, what you can do is you'll find an investor tab, find the financial statements. Sorry, I'm already there. And, let's just look at the financial reports, the recent one. So generally, you won't have to go to SEDAR because the company will have their statements on the site. But SEDAR has a whole bunch of other documents as well, right? So they generally have everything. Let's type in Ivanhoe. Ivanhoe. So Ivanhoe, so there we go. Like it has like literally everything, right? So this is all the documents. If you want to release, they're all here. But again, like I said, generally on the website, it'll be there. So here's Ivanhoe Mines. So I'm not going to talk too much about financial statements, but I just want to talk about certain things that I look for. So they do produce. So they do have a cash flow statement as well, profit loss, all that kind of stuff. But generally, you know what? Actually, let's look at a company that is more of a speculator, because it'll be much more helpful. Let's just say Nevada Copper. So this is a company. They're a junior. They don't make money. Basically, they're sitting on an asset and they're hoping to either be bought out by a company, right? So let's look at their financials. Did they have financials? Oh, okay. So maybe these guys will actually have to. Perfect. It's actually a good source to use Sedar. Okay, so let's go back here to Sedar and let's search by company. Let's do Nevada Copper. Okay, so let's look for their most recent financial statements. There we go. Okay. Well, so it's an interim support, so let's look at that. Generally, for Sedar, they have to make sure that you're a human. So okay, Nevada Copper. Let's take a look at this. So again, generally, because they're not making cash, they're not making any profits, you'll have their balance sheet as the first thing to see, right? So when I'm investing in a speculative stock, I look for two things. So the first thing I look for is their cash position. So I want to see that they have a boatload of cash. So in this case, yes, this is, remember, expressed in thousands, so that's 62 million, right? So that's what I want to look for. You know, they're not going to be doing some sort of funding. Generally, you know, like I said, sometimes funding means they might issue new shares, which means they're going to dilute the shareholders. So you don't want to be a shareholder holding shares of a company that has not too much money, and then they dilute your shares even further to raise more capital. So generally, if I know some sort of equity financing is about to happen, maybe wait for that to happen before getting into the stock, right? Because you don't want to see your shares get diluted if they take that path to issue more shares for equity. So when you know cash is high, they're not really going to have problems, right? So they have enough funds to survive the year and all that kind of stuff. And this goes back now to my my talk on the the finance talk, right? So remember, I was talking about how a lot of these companies that I heard in an interview, they're not actually making any money because they're not actually raising too much money, because the environment right now is so bad that a lot of funds don't actually want to raise too much money. So you want to look for companies that already have cash with them. So that's really, really important in my opinion, especially in this environment. So that's why I want to stress this. And the date today is May 12th. So from now, May 12th, 2019. So the environment right now is that a lot of equity financing aren't happening. So you want to look for companies that have some cash, because maybe for the next couple of months, 6 months, a year, maybe even less, they won't be raising too much money. So you don't want to be sitting in a stock for 6 months, 9 months that has no cash, that can't instigate some sort of catalyst. So that's why this is important right now. So I look for cash. The second thing I do is also I look for the working capital. So working capital is essentially current assets minus current liabilities. So I want to make sure that it's a positive number, of course. So 63,989 minus 33,173. So it's a positive working capital. So essentially, if this company goes bankrupt, they lose everything, you want to have a positive working capital, right? So that's just a basic thing that a lot of people look for companies. So that's also what I look for. So cash placement and also positive working capital. And this company has both. Of course, sometimes you can look for debt, so they have a long-term debt, and you can take a look at all that kind of stuff, right? So that's more to do with other financial things, other financial analysis that I'm not really gonna talk about in this video. But that's just a basic thing I do when I look for mining companies. Of course, like I said, you know, if it is what do you call it? If it is to do with a producer, there is some differences because they will be bringing in cash from operating activities. So there is a bit more analysis just to see if they're actually making profit and all that kind of stuff. But this has a lot to do, like I said, with the fact that gold prices are close to 1200, 1185, and costs, so especially oil has gone up, so costs have gone higher. This again goes into certain things such as if you're building a mine, is it economically viable to actually build a mine? Are the resources close to ground, or you actually have to do deep drilling to get them, which adds more costs? Is the gold a good grade? So like, is it a high grade, which means that you'll be able to sell it for a bit more, right? So those are things that you can look at for costs and stuff, right? So that requires a bit more analysis. That's beyond the scope of this video. So that's why I recommended certain books at the beginning, and there's a lot of other books on geology and basic mining finance. So check that out. Do your own diligence. Again, these are all speculations, right? So it's a lot to learn, and I'm just trying my best to teach you how I look at certain stocks. So that was Sadar. Let's finally look at SEDI. So the first thing I want to mention actually is if you look at Sadar and SEDI, like they're using like 1990s internet homepages, right? So it's funny. I don't know why they do that. Maybe they just don't want people using the site. But SEDI is another site which I use, and what I use this for is to look at insider information and who owns the stock. So you can see here when you get to SEDI, it'll say register. Don't worry, you don't need to register or log in. Click on this button here, access public filings. So let's click on that. And there's 3 tabs here: insider information, issuer information, summary reports. So in this case, I don't really use view issuer information too much. I usually use insider and summary. So let's look at insider. Let's click on that. So this is interesting. You can actually, if you know the insider's number, you can use his number. If I usually use this, so let's put a name here for billionaires. So since we're in Vancouver, let's do the Aquilani's. So we'll search for Aquilani. Did I spell his name wrong? Oh, it's Aquilini, isn't it? It's Aquilini, I believe. There we go. Sorry. So Aquilini. So Francesco Aquilini owns the Vancouver Canucks. So let's click on him, and you'll see he owns shares in Franco Nevada, Thunderbird, J55 Capital. So I think it's a cool tool to use. Who else is a famous? Pattison, Jim Pattison here in BC. So let's do that. Let's search him up. There he is. So James Pattison. Well, it gives you the list there, but this can tell you, okay, he gives you a bit more information, so you can see, okay, Pattison has Canfor. A couple of my buddies and we know about Canfor and the lumber industry. It's a cool tool. I think you can sort of see. You also see he's in West Fraser Timber. So it's a nice tool. It's a nice tool just to see what big money is holding. So again, there are legal ways to get around this, right? Like you can do it through a fund. So if it's not the individual, they'll do it through their fund, or sometimes they'll even have an alias. So another famous miner guy in the industry is like Rick Rule. So there he is, Rick Rule. So again, he's mostly through Sprott, so a lot of his resources will probably be through Sprott rather than under his name. So it's a cool tool. Like I said, you can play around with this. It's quite interesting. So finally, let's do view summary reports. And for this one, we're going to do insider information by issuer. Click on next. So here we're going to name a company. So let's do Nevada Copper. Search. And then we're going to click on view here. And here we go. Now we have insider information on Nevada Copper. So you can see here that the amount of shares the person holds. I believe insider is, the definition is like 10% or something. So you can sort of see okay, you know what their relationship is, when they cease to be an insider. So you have a lot of information going back, and you can sort of see, okay, look, Capstone Mining owns a few shares. So a lot of these are they're actually, sorry, they've ceased to be an insider. So these guys aren't insiders anymore. But if you see this one, ceased to be an insider, and you see non-applicable, that basically tells me that they're still holding shares, right? So they still are insiders. So I guess you'd have to play around with the dates to see, but you can sort of see the ones that already have dates aren't really important to us. We want to find the ones that are not applicable. So you could sort of see sometimes, like I said, I look at certain stocks and you find some people, some finance guys, and you're like, oh, holy cow, right? This guy's still here. So here go Evgeny, I believe his and Vladimir, the IROX, I believe they're like a billionaire Russian family. So that's sort of what got me interested in this company, Nevada Copper. So they're there as well. They still are holding their shares. But again, use this as a nice tool. It gives you a bit more confluence and maybe a bit more confidence to take the position. But that's there as well. So again, that's pretty much what I wanted to share with you guys today about the mining industry. I just again want to stress, a lot of these juniors are mostly speculative, right? They're not really investments, I wouldn't say, because they're not making money or whatever. You're hoping that they're going to be bought out by a company, or they find some crazy reserve. They find some a big reserve of gold or whatever, a big discovery, crazy discovery, right? So you hear about that a lot. There hasn't been like a major discovery for quite some time, and a lot of these bigger mines like Escondida, etc., they're running low not only on like resources but also on high grade, and they'll want to replenish those resources, right? So that's the hope. If gold prices do go higher, which I believe silver, I'm a big silver fan, but I think gold will go up as well. A lot of these companies will have to go out to accumulate more reserves. One final thing I'll mention is, just because a lot of these companies aren't making too much cash, a smarter way to play the mining industry for maybe more the conservative investors, maybe a bit more older investors, is companies called royalty and streaming. So essentially what these guys do is they provide financing for companies, generally that are mining or producing, or maybe are close to producing or about to produce in the future. And they say, okay, look, once you start producing, we want 10% of the profits for each ounce of gold mined or silver sold or whatever. So these royalty streaming companies, they have low costs because they're not actually doing the mining. They're just funding companies, mining companies, and those mining companies have all the costs to dig and all that kind of stuff. And when they sell their output, this royalty and streaming company actually makes money on that. So it's a smart play. There's the big 5 royalty companies. So Franco-Nevada is probably the most famous, and it's funny, we saw that in the Aquilani's possession, but it's generally the company that a lot of people look at. Franco-Nevada. There's Osisko Gold and Streaming. There's Sandstorm Gold. There's Royal Gold, and there's also Wheaton. It used to be Silver Wheaton, but now they have more gold assets, so it's called Wheaton Precious Metals. So those are the top big 5 royalty companies that a lot of people look at. There's also 3 more smaller ones that have come out, or maybe 4. Mavericks Minerals, Metalla Minerals, and I believe Abitibi Resources. It's a region in Quebec, I believe, Abitibi, and also EMX Royalty. So again, the mining industry, I'm just gonna give some other words of caution. It does get a bad rep. There is a lot of shady things that do happen here and there. Canada doesn't really have the best financial regulations. We're actually, like Russia and Nigeria are ahead of Canada in terms of financial regulations. And, there's a lot of pumping a lot of advertisements in the mining industry. So do your due diligence. Again, you know, I'm not a geologist, but I try to learn as much as I can about geology. But again, that's why I focus a lot on the share prices, how much cash the company has, their working capital, and if they're going to be sitting on a good land package. So I hope this was helpful, and I'll talk to you again.